Yo, what's going on, guys? Welcome back to the channel. Now, what a great day, right? First of all, let's start off with that. On a positive note, today's session was a little bit of a grind towards the upside, but yet a positive and good for the market, right? Good for the bulls. So those of you who took long positions today, intraday, congratulations. Really happy for you. But also do be careful because this market could give us a reversal at any moment. Now, this is a mixed bag, right? We have bears saying that we're going to head lower. We have bulls saying this is the breakout. So I'm here to tell you that we need to wait for confirmation, right? We need to be certain and strategize as to what our next move is going to likely be. So I'm going to show you guys our bullish count, right? Which suggests that we may, the last line of defense, right? The last sort of idea that if we break these levels, then the markets have actually found a low, some type of low, right, on June the 17th, which is down here. All right, so let's review that count. But before we do, let's take a look at the one we've been tracking for now, right? Yesterday's video, we talked about a potential pullback. We didn't get that. Instead, we got this beautiful bullish momentum today. However, just to recap real quick on the daily time frame, guys, I'm still short-term bearish, right? Long-term bullish. What do I mean by that? I mean that the markets, I'm anticipating a bit more downside to go, right? And that target I'm looking for are between this range, right? So between this range, which comes in between the 38.2% retracement and the 50% of the entire COVID rally, right? From 2020 to the top of 2022. Look, I'm looking at this as an A, B, and potential C wave to the downside. So with that being said, taking you guys down to the 1 hour time frame so you guys understand and know where my thought process is at. We're looking at this, right? We're looking at this potential wave 1 completed here on May the 12th, pull back into the wave 2 on June the 3rd, then a 5-wave low to the wave 1, 3-wave pull back into the 2, right, around the 618, and then an A, right, sorry, wave 1, A, B, and C, right, into 389, right? However, what I don't really like about this is that we are going a little bit beyond the 786, okay? And just like I don't like it when we're looking for a potential wave 2 to the on the bullish side, this doesn't look good either on the bearish side. All right, the wave 2 has already extended a little bit close to the wave 1 origin, the origins of the wave 1. So anything above the zone, right, anything above the origin of wave 1, let's say here at 393.16, if price action continues on higher and breaks that high, then this is not the count, right? Because we can't have that, right? We can't have wave 2 break above the wave 1. For that reason, guys, that's why I'm still contending with this count, right? And I'm still looking for a potential reversal using this one. However, in the event that we don't, right, then we'll look at this, guys. Take a look, right? Actually, let me show you the complex. So the bullish count that I'm tracking here suggests that we've already completed the correction on June the 17th, and now we're looking at a wave 1, ABC pull back into the 2, and now we're gearing up, and we're actually in the makings of wave 3. So anything that breaks below south of invalidation, which is 362.13, 1, 2, 3, 4, 5, anything below the zone right over here will be considered invalidated. All right. So if we keep on trending higher, then it is good. Now, the last case that I was mentioning earlier, the last line of defense for the bears, right, comes in the form of a expanded flat correction. So let me explain, right? So we're still looking at a wave 1, right? Pull back into the 2. Now we have the 1 expanded flat into 2, right? And then looking for a wave 3. Now, what do I mean by this, right? So from our highs here on April the 21st, right, we generated a trend line resistance, right? We've already confirmed that here on June the 6th, we broke down, and now we're trying to retest it. We have one problem here, though. All right, the guideline it's a guideline, the degree violation. Okay, so what does that mean? It means that the higher degree wave 2s, right, a higher degree, a smaller degree of its parent degree, which in this case is the minor degree versus the the minor degree, right? That degree cannot be larger in percentage than its parent degree. So in this case, right, we have by percentage from this wave 1 to this wave 2, we have about a 9.7%, right? If this degree here, this wave 2, goes beyond 9.7, which I have here, or at least 10%, let's call it 10%, which is where I have the trendline resistance, where I have the wave C pullback or the wave C extended. If we go beyond that, right, then this invalidates this count. This invalidates any type of pullback or any type of bearish count that we may have. All right, so we want to see, the bears would like to see this trend line hold, and anything below 399.83 or at least 400. If the SPY breaches 400 and starts continuing higher from there, we have to revisit the wave count, right? And we have to start now focusing on our bullish count, which suggests that June the 17th was the actual low. Okay, otherwise, guys, if this is the case, it is likely that, yeah, that we may be in store for a temporary bottom, right? I call it temporarily because anything can happen, and this is actually not the case anymore, right? And this is the why the from the top to the low, from January to now, right, 7 months of correction has completed on June the 17th. All right, guys, so I think I'm not going to review the rest of the indices because we have to focus on trying to understand if SPY is going to break above 400. I mean, even the SMH, actually, let's take a quick look at this, right? We were tracking this to go lower, 1, 2, 3, but since then we've broken above this low, and we're looking to have an impulsive reaction to the upside, right? As I mentioned today, this move here was indicative of the Samsung earnings that were pretty positive for semis, and so semis, being a big industry group within tech, gave us a little bit of a boost to the upside today. So that also played out on top of what the Fed minutes had said yesterday, which was really nothing, right? With nothing that we already know, in other words. Okay, so let me take a look here real quick at let me see. So same deal, right? Look, the Qs are about to break above the wave 1 origin, right? If I turn this on, or wave 2, right? Wave 1, 2. So you start to get the picture, right? But for now, let's just focus on the SPY. Let's understand if this is going to be the case. We're going to head higher. Confirmation comes in at the break of this wave 1 high. All right, guys. So you guys know. Thank you so much for tuning in. Appreciate you. Take care. See you guys tomorrow.